Hello, everybody. Welcome back to another episode of Visions and Voices. I'm your host, John Stewart, partner here at Armanino. Today, I'm joined by a new friend of mine, someone I'm really excited for this conversation for because he's an expert in the space, Mr. Richard Wilson. Richard, can you please introduce yourself to the audience?
Sure. So my name's Richard. I'm the founder of the Family Office Club. I started it 18 years ago. So I'm based out in the middle of the ocean in Hawaii, but I've
I'm
got
jealous.
18 members, and I've hosted 300 live events within our investor club. And we're just kind of a community of founders and super entrepreneurs, basically, that people call family offices.
I think it's fantastic, and I love how long it's been around. I love that you're leading it this way and people gravitating towards the Family Office Club. Yeah, I'm just really excited to meet with you today and go through it. So let's start at the very beginning. So walk me through it. I don't know the background, right? So it'll be new for me to hear too. What inspired you to start the Family Office Club, and how is your vision? And maybe we'll go into how has it evolved since then?
Sure. Well, my role was representing a separate managed account manager who also had a hedge fund. And as I called on wealth advisors, some of them said, well, my clients aren't even accredited, so I couldn't invest in your hedge fund. So I said, okay, I guess I wasted my time on this phone call. And then I called one person who said, well, I'm a family office, so all of my clients are accredited. And a light bulb went off. And I said, okay, I'm only calling on family offices. Well, trying to do that was harder than it should have been back in 2006. And there were no trail guides on the industry. There was no one being helpful. It was like a journalist from the Financial Times who had never worked a day in their life in the industry writing an article, and then someone from Bloomberg writing an article, and like that was it. And so I started a blog. The blog took off. I got on the front page of the Boston Globe when I was 26 years old, and then I spoke
That's
a couple
cool.
hundred times, and
Yeah.
the rest is history, I guess. It just all turned into a formal investor club from what started with a couple blog posts on blogger.com.
That's hilarious. I mean, and that's how I honestly, maybe that's just how really good ideas build, right? That's when you know you're onto
Right.
something when it slowly builds over time like that. Because now you're hosting live events with what, 400 or 500 people in the room or something. I mean, it's got to be, do
Yeah,
you ever
yeah.
look back and you're just like, wow, how the heck did we do this?
It is crazy. It seems a little bit unreal. Sometimes I'm still one of the younger 10% of people in the room because I started it when I was so young. But one asset that took us 12 years to buy was .com. And, I followed up every 3 to 4 months till they sold the thing to me. But because of that, I've gotten to interview 45 billionaires, and we interview some of them on stage. But last week we interviewed John Paul DeJoria, who's the founder of Patron Tequila and Paul
Yep.
Mitchell Hair Systems. And he was homeless twice, and now he's a multi-billionaire. And the number one thing he said over a 30-minute interview is that you want to create a product that people are so hungry for, and it's so amazing that it just takes off. And when it takes off organically, that's when you know your plane can float and you should
Yep.
put a jet engine on it, right? And usually people
Right.
get that backwards.
I think you're right about that. They try to kind of over-engineer it and see if they can jump the shark, so to speak, but you can't. You really can't.
Yeah,
I mean, if you do, it's a short-term solution. It's not going to stay.
right, right. Yeah,
Yeah.
for sure. And a lot of it's just listening, right? When you have a big audience, like you have, I think, 3,000 employees on your team,
Yep.
you have 2,500 clients, many, many centimillionaires, right? So just now with that critical mass, just like if someone has a big podcast or a blog, by listening, if you're just listening to what their pain points are, then you're designing something from a place of service and not trying to force it on somebody, then everything
Exactly.
goes better. And that's basically how we created the Family Office Club.
Yeah.
Just a lot of listening and following up and elbow grease along the way.
It's that old adage, voice of the customer, and if you listen to it, it'll actually guide your whole way through it, right? Like,
Right, right.
no,
Yeah,
that's
for sure.
cool.
And importantly, for people listening, when I started, I was in the basement apartment in Harvard Square, and I had less money in my bank account than I had due for rent when I started the business. And it's by listening to family offices at my own events, learning from them as a super founder, and then implementing their mindset and their strategies is really how I've become wealthy and successful as a business person. And so you can just learn so much from family offices because they're the winners in the game of capitalism. So I love working with them for that reason.
I think it's a great. I never thought of it that way, but I think you're absolutely right. They're the winners in the game of capitalism, and you're right. You can learn from every one of those conversations easily.
Right. Yeah,
You can
for
get a
sure.
little
And so it's
nugget
like
in.
the other thing I've taken away from billionaires.com and hosting these 300 events is that to get unusual results, you have to take unusual actions. And those unusual actions came from a different mindset or a different mental model. And so
Hmm.
we talk about that quite often about being ultra healthy, not just ultra wealthy, but also
Yep.
being really decisive, have the courage to do something completely different than other people, custom design deal structure, and just approach things so that you're staying in a peak mental state and that you are navigating the investment world, not following the herd. And that's super important, I think, for investors listening to hear, because if you're always following your wealth advisor and the
Yeah.
herd, good luck, right? It's
You're
probably not going to go too
commoditized.
well.
You don't have any differentiated value, and what are you gonna how are you gonna
Right,
do it, right?
right,
Yeah.
right.
So okay, so let's talk about so can you share in that whole journey, and I'm sure there's probably several of these, but can you share like a defining moment when you realized the potential impact of what you were building? Like give us a war story
Yeah.
here. Yeah.
Yeah, yeah. Well, I mean, one funny one that almost was like the pursuit of happiness when he walks outside on the sidewalk because they offered him the job and he like starts crying. I remember being in a burrito shop in Harvard Square and we launched one of our training programs and I refreshed my PayPal and it said 7,000. I refreshed it again, it said 17,000. I refreshed it again and we brought in $35,000 in a couple hours. And before that, people wanted to pay me 50,000 a year plus commissions to raise capital and to bring in
Right.
$35,000 in a day. I realized like, whoa, we have something here. And, we ended up doing seven figures our third year in business and grew it from there.
That's fantastic. That's really good. I love hearing that. I mean, and that's when you know, again, that's another litmus test of what's working, what's not. But yeah,
Right, right. I think connected to that though, like a couple other genuine ones is just that like, why is it that I'm even able to own billionaires.com with my little 20-person team? Why doesn't Goldman Sachs own it or somebody with 10,000 employees? Like it's so
right.
backwards, right? Like how have I been lucky enough to put out more thought leadership, I think, than anyone else, at least in video format on family offices? It almost seems
I
like
would
it shouldn't
agree.
be the case,
Yeah.
right? Like I just feel so
Right.
lucky that I got into it when I did.
Yeah, yeah, and I think it's one of those cases where you kind of created your own luck, right? You were listening, you listened to the signs quickly enough and pivoted to them that it actually fell your way, right? So,
Right, right. Like some people say you have to realize when you're getting lucky and then go like 100x on that. And I think that's an example of that, right? It's like luck happens to many people, but if you put yourself in the right position, more luck happens. But when luck happens, you have to be like, right there was a fortunate little thing, and I'm going to run with that grain of sand and make it like a mountain if I can.
I love that. Yeah, that's a good lesson for anybody to hear, right? Particularly if you're building wherever you are building your career or your vision or
Right.
whatever it is, right? Yeah, that's awesome. All right, so let's transition a little more into the family office high net worth investor. Talk about what are the major trends you're seeing that are currently reshaping that landscape? I mean, there's a lot out there. Pick whatever one you want, obviously, but yeah, but what ones kind of rise to the top for you?
Yeah, I think that one of the number one things is looking at these trends like waves coming in from an ocean. If any of you have ever surfed before, and there was these trends, whether you agree with the morals of investing in sports betting or cryptocurrency or cannabis, these are all trends that have come. And on the way, if you got in early, even if just with 1% of your net worth, you probably did well as an investor. Now, artificial intelligence is right in front of us. And the trend right now is figuring out how to help families use artificial intelligence, which I know you do a ton of. And so we've been spending a lot of time building out 30 different little artificial intelligence tools internally for the members of our investor club, which is different than the tech implementation you do. But that's right in front of us. Robotics is the next thing, which is
Yep.
inevitable, obvious, already here, really. But it is one stage away from being mainstream still. And a lot of people still don't realize how massive it will be. So I think like one of the trends is not stating the obvious, like, oh yeah, AI, like everyone else talking about AI, because that is huge. And I spend time on our AI tools every day. But more is just these macro trends coming, and like robotics wave is about to crash. The AI wave is
Right.
crashing, but learning about that so you can think what is the next wave or two further down the road that's coming that is inevitable, but people are writing off and laughing it off as some unreal thing, and that's nothing. It's a waste of
Yeah,
time.
I think you see a lot of that today, and I agree. I've been having those same conversations with families and wealth advisors about particularly AI. Robotics is a good one too, but particularly AI, it's like, guys, it's already here. Like if you think it's 5 years out,
Yeah.
oh my gosh, you've already missed it, right?
Yeah. Yeah, yeah, for sure. Nowadays, you can take 10 pitch decks and rank them all instantly based on asymmetrical risk,
Right.
experience of the founder, deal structures, et cetera, and just instantly do what would take days for a human to do. So we're excited by all that tech and we're spending a lot of time on that. And I think that the only other thing that's related to that is that
Yeah.
investors really like to meet in person with people because like right now, this whole interview, I could just be an AI bot and a due diligence room could be faked. Anything in a pitch deck could be faked. And the
Yeah.
Centimillionaire last week on stage, he said basically when he invests money, he's investing in your character and your values. What you say on a piece of paper is only worth so much. He wants to go and see the
Absolutely.
manufacturing plant, but yeah,
Yeah. I actually like that aspect of AI because, I know there's a lot of doomsday around it. I'm
yeah,
not necessarily one of those. Understand there could be nefarious means. I'm not saying that couldn't happen, right? But I choose to look at all the brighter ends of the productivity part of this.
Right.
And I think one of the nice that come out of that is what you just said is that it kind of actually rises up to human communication, and direct communication actually matters a little more now.
Right. Right.
And that
Yeah, for sure.
authenticity, that character actually matters, and particularly in this space because there's plenty of options in
Yeah.
this space for family office and high net worth individuals. They're going to pick the ones they like and trust. Simple.
Right. Yeah, I think there's two big stats that are super interesting. One is that family offices now manage $14 trillion, which is more than all of private equity and all of venture capital combined. So if you
Mm.
think family offices is a small thing or just this little
Yeah.
thing, it's massive. And then the other stat is that MIT did a study of 600 knowledge workers, and Harvard with BCG Consulting did another study of 400 knowledge workers, and they
Yeah.
found that on average, AI will enable knowledge workers to do work 33% faster with 25% less mistakes. And it gives each person an effective IQ boost of 12 points. So imagine
I
if
didn't know
you're
that. That's
not
kind of
average.
cool. That's kind
Yeah,
of cool. The IQ boost. That'll get people's attention.
it's awesome, right? I mean, like, who doesn't need an IQ boost of 12 points, right? So,
Yeah, yeah. Mensa's going to have to raise their target now because everybody's going to start to qualify.
yeah, exactly. I mean, and all that matters in the real world is your brain plus AI. Like
Yeah.
at school are told like, don't use AI. If you're caught using AI, you fail the whole class. And I don't know if it's just because the teachers know that they're being replaced by AI at some point on some level, but like in the real world, you should be using AI, right? So,
Absolutely.
we're making sure our kids know that and
Yeah, we're
using it all
we're
the
we're
time.
starting to mandate it here at the firm in certain areas, not everywhere, but like,
Yeah,
hey, yeah, I keep equating it to, and I'm curious to get your view on this. I kind of equate it to when, the personal computer and Excel kind of came into prominence. You were going away from honestly phone and paper to
right,
this model, and it wasn't that jobs were being taken away. It was that if you didn't adapt to it, you weren't going to have one. And I feel like we're at a very similar moment right now. You have the
right.
opportunity to adapt to this new way of working. And if you don't, then yeah, maybe your job is going to be at risk. But if you adapt to it, no, you're going to have plenty of opportunities because it's just a new way of interacting now.
Yeah, for sure. And there was a Harvard Business Review article that said it was all about should you trust your gut? And
Mm.
the conclusion of the article was like, well, it depends what your gut is made out of. And that's one of the reasons why Family Office Club exists is that at one event, you can hear from 125 speakers, hear from centimillionaires, decamillionaires, network with peers in a room. And it's a fire hose of information and connections. But at the end of the day, it gives you lots of high quality inputs. And I think that
Yeah.
that is the problem with general AI is like GPT had 800 million users last month. Daily GPT has 120 million users, and it gets its answers by crawling Wikipedia, random websites. It tries to overweight the credible ones, of course, but it's fed by 800 million people. If you
Right.
instead ask a tool with all the 1,000 people who have spoken at our investment conferences and you get advice from them and their collective intelligence, it's going to
Mm.
say something different than Wikipedia, I guarantee you,
Right.
right? So it's like it's not about using AI. It's like using human brains plus AI or specialized AI that's just for you. And I know that that's just something that I think a lot of people don't fully grasp yet.
Yeah, I think you're right because it's really about a productivity tool because they're sourcing information from humans still. It's not like they're making stuff up, right? So
Right,
yeah, it's still, if you consider the source, you know where it comes from. And then
right,
it's the productivity win, the
yeah,
sheer speed in which it can do analysis, right? So
right,
yeah,
right,
that's exciting. So okay, so then let's talk more about that trust element because I agree all this is changing that dynamic.
sure.
And you see it on the front lines probably even more than I do, to be honest with you. So, what are some of those key qualities that families look for in a trusted advisor or partner now? And maybe you can compare what did it used to be? Has it changed? Is it different now? Do you see certain things changing?
Yeah, I think that they look for clarity around exactly what you do to add value. They want it to be simple enough that hopefully you can show a visual of like, this is what we do to add immense value. You usually want to see a niche extreme focus so that you're hyper specialized, harder to trust. You're the number one expert in the world on self storage in 19 different cities versus, okay, you only manage 75 million, but you only buy self storage in Austin, Texas. Probably know it pretty well. Like that kind of makes sense, maybe,
Right.
and so those things are really important. Meeting in person, you're 16 times more likely to close a deal, Robert Cialdini says. So that's really important. Being honest, transparent, disclosing the negatives before they have to stumble upon them if there's an elephant in the
Yeah, I
room.
think that's a big part right there. I think setting proper expectations openly and honestly, right? Like say what could go
Yeah.
wrong and be like, hey, here's how I'll handle it if it happens. But I just
Yeah.
want to be honest, here's what I tend to see, and this is what we do. And if they don't like it, then they're not the right fit for you anyway.
Yeah, amateur hour capital raisers try to pressure investors, don't build a relationship, just pitch the numbers, say they have the best deal in the world, get involved in daisy chain deals, or they promise the moon. And like Mike Tyson says, you can have a plan, but then you get punched in the face.
Then you get punched in the
And
face.
if they haven't
Right.
been punched in the face before, they think that their spreadsheet, like I can create a spreadsheet today that solves world peace, but
It
is it
doesn't
going to
mean anything
happen?
yet.
You
Yeah,
know,
exactly. You got to
every
implement
pro
that,
forma is
dude.
good.
Yeah, exactly. Yeah. The whole idea of a pro forma is that it looks good. Don't tell me
Yeah,
if you build a poor pro forma, why?
yeah.
Yeah. Yeah.
Yeah, yeah, it's like a BS forma. It's basically what it is.
It
So,
really is. Yeah, that's funny.
yeah. So I think that's a big thing, and I think that nowadays people are just tuned into curveballs can come. Ever since COVID happened, almost feels like we're living in a movie in terms of the headlines that come out. And
True.
so, with the world changing like that, you really want to trust your money with a steward of wealth that is rock solid and is going to have the courage and tenacity and grit to work through stuff and do what's right. And so I think that's just emphasized within the current world that seems to be changing. And the number one quote last week on stage from our AI panel was that the world has never been changing this fast before, but it
Mhm.
will also never change this slowly again. It's only going to get faster. So
Yeah.
if it's feeling fast now, like put on your seatbelt because it's just going to go faster.
Right. And if you look over a longer arc of time, that's been true for hundreds of years, actually, right? So
Right.
it's just everything gets precipitously faster the change.
Right, right.
And
So I think like the last thing I'd say on that is just if you're an investor listening to this, what's really important is to figure out where are you playing offense in your portfolio? What's
mhm.
the mandate for real estate and public markets? But where are you growing your wealth? And like what custom deal structures should you design? Like what's the unique game that you're playing so that you're focused on a game that other people are not playing that plays to your strengths. So you set up a game that's winnable and that you enjoy playing. I think that's like the whole point of having a family office is to get that game dialed in.
Yeah, I think you're right about it because it allows you to focus and concentrate so that it maintains itself for, well, I guess whatever the goals are, right? So like one of
Right.
those being generational wealth, and I want to talk about that for a second because I'm sure you see a lot of this as well. We're going through a massive change and it will be like probably for the next 10, 15 years, this generational wealth transfer.
Right.
And so, how do you see these families and individuals approaching investing and succession planning differently now? Because I'm seeing my end too, but I'm more on the interior side where we're saying, okay, we've got to set up different entities and help educate and stuff. But how are you seeing it on your side of the wall there in terms
Um,
of what's changing there?
there's almost always a lot of conflict, right? It's expectations, right? One son inherits more money or gets use of family assets more than a daughter because the
Hmm.
son was involved in the business, but the daughter thought it should be equal. Or the parent doesn't want to give up control quite yet, even though they're 86, 88 years old and they might not be of sound decision making, or maybe they
Right.
are. Nobody knows for sure. So there's really a lot of conflict in those interpersonal dynamics. And unfortunately, some people not talking to each other anymore is quite often or being shut out of the family. So I think like what's most important with all that is to realize that everyone should have their family values above their kitchen table because it's
Mm.
more important to pass on the values than it is the money. Because if you just pass on the money, then your kids are just going to sue each other and not talk to each other, perhaps. If
And
you
then they're
pass
going
on
to
the
fall into
money
the
and values,
statistic. They're going to fall into
well,
the statistic of not getting past G2, right? It's just
yeah,
going to, yeah.
for sure. And if you pass on money and values, they're probably more likely to keep the money. But if you lose all the money, you could earn it back with the right values.
Hmm.
And maybe the only reason money was lost is because you violated the values in some way now that you look back at what happened. And so really being super rock solid on those values and transparent and fair and equitable, but it all drives from like the values at the core of it all. And for some families, like Warren Buffett says, I want to give my kids enough money to do anything, but not enough money to do nothing. And if your financial IQ doesn't grow with your net worth, the world will correct that very quickly. And that's why lottery winners and pro athletes sometimes go bankrupt because their financial IQ was like this and their net
Yeah.
worth went like that. And everyone around them benefits from that, but they don't.
Yeah, but they never took the time to figure it out. I agree, and that's the
Yeah.
risk point. And I like that because it's value driven, and that's not different than if you think about it as a corporate business. That would be mission driven, right? Like
Right.
it's the same. It's the same exact principle that you should be focused on your values and your strategy, and then everything else will follow behind that. But if you start the other way around, again, maybe a short term it looks good, but long term it will not.
Yeah, for sure. We have a one-page cheat sheet for anyone that wants to put together a family office. It's like a free PDF, and it's got about 50 different fields on it. And if you can't fill out some parts of that, it means that you probably need to do some thinking before spending money and hiring a bunch of people and making decisions, because it's kind of like very high level view of the forest of what you're actually trying to do as a family office. And yeah, it's common sense that a company should have core values. It's like
Right.
super 101 business, but most families do not, and it has all the same benefits, right? So
Exactly. That's the thing. If you approach that same business mindset to it, it'll work out. And I think you're right. The families I see who are most successful at it, that's the mentality they have.
yeah, and it helps
Treat it.
to, especially helps when you have kids, because we punish and reward our kids based on the family values. And then you can give them examples and say, like, I know you might see like Lamborghinis on like social media or a YouTube thing. We don't really have our kids on social media, of course, but like, we might be like, oh, wow, Lamborghini. But like, making sure they know, like, hey, one of our family values is being healthy. So instead of buying multiple Lamborghinis, we choose to spend our life in Hawaii and be outside and go kayaking and swimming in the ocean and
Sounds
live a
silly to me.
healthy
Yeah.
life, you
Yeah.
know?
I think you made the right call. I would love to make that call. It's a brilliant decision, sir.
Yeah, well, come on out sometime for sure.
Yeah. Okay. I'm gonna take you up on that. All right.
Yeah.
So, so that goes into let's talk about risk profiles too, right? Because and it can be about the generational handoff or just from the initial principles, but how do you see them approaching risk differently now, and particularly from institutional investors, because obviously it's a very different way of working. Uh,
Yeah.
do you see differences there, and is any of that shifting?
Yeah, I think that nowadays they're more skeptical of what real estate platforms are promising, because many of them have shut down distributions or
Right.
lost their money after promising the world. And yes, on page 122, the PPM disclosed that risk, but it really sounded great up front. And so they're more conservative on some investments that traditionally were right down the fairway, and just being a little more careful on getting to know the group. And that usually means investing with billion-dollar plus groups they can really trust, or people they've met in person with more.
Mhm.
I think the days are harder where you raise money over the phone for a $500,000 check. And people were doing that before. But interestingly enough, people do not want to miss the massive wealth creation from AI, robotics, crypto, et cetera. So there's a little more appetite at the very same time for having some allocations to these frontier areas that are going to be growing, while at the same time being more conservative on the private equity real estate deals they're doing, and liking to have collateral behind their real estate deals and doing credit debt deals because of getting beat up a bit on the equity side.
Yeah, that makes sense. And given current landscape and environment, it probably makes sense to have a mentality like that in a way. So.
Right.
And we talked a little bit about AI, but we can maybe broaden out to technology and how that's overall impacting this segment, whether that's from an operational perspective that you're noticing or an investment strategy perspective. How are you seeing technology now? And you don't have to focus just on AI. I mean, there's a bunch of stuff out there, but how do you see that changing how people are approaching the market?
I mean, one interesting thing is like almost every pitch says AI driven or AI something,
Yeah,
so it begins to not mean too much. So you have to be super clear about how exactly you have proprietary data or exactly the use case, because investors just are a little bit tired of hearing how everyone is doing that. So that's
no
one
doubt.
trend. I think another trend is that some of the software providers out there aren't serving the market too well when they have like reporting solutions, like groups that your firm has partnership agreements with. So you know them very well.
Sure.
And as you probably know, like a lot of those groups and others out there don't have very transparent pricing. And so we get complaints from investors that they'd like to go and just have something with clear, transparent pricing and not have it feel like me as an American going to Morocco or Mumbai, and there's no price on the souvenir until they ask your
Right.
net worth, how much is your family office worth? And they say, oh, white skinned male business owner looking guy with a Nike polo. Yes, the price of that trinket is $400, right? And like
Right.
that's how family offices feel in the tech software, like software solution space. And it's a little bit frustrating because they don't like to be wasteful, right? They
No,
like to be resourceful, but they want to be
right.
honest. They don't want to lie about what their AUM
And
is
no
when
one
people
wants to feel
ask.
like they've
So
been taken advantage of. That's not a fun
yeah,
feeling. So why would they be any different, right? Like no one wants that. That's
yeah,
the
yeah.
ideal way to build trust, right? So.
Yeah, so that's a little bit of a frustrating process for some in the space, but the need for consolidated reporting and reporting
Mhm.
between family members, what happens from a practical perspective is once second gen starts coming in, somebody's put in charge of reporting to the different family members and organizing all of that. And it's a bit messy, and it can take 9 months or a year to vet people and figure out what's what, who to use, who to trust, who to help
Right.
implement. And I know you're the expert on that, much more so than I, but I see it from
And
my
we're pretty transparent. It's good
perspective.
you're saying it because we're very transparent. It's kind of flat fee stuff. We don't attach to the AUM. We don't care about it because it's not that's not going to help. That's not going to help build trust with them. So we're very clear about what it is.
Sure, sure, sure. Yeah, but I think like you've obviously had a lot of success in winning over those relationships, and you're on top of all those trends. And now that when second gen people start getting involved, all of them are going to want AI tech solutions. Where some of
Mhm.
the first gen, they're still fine with a simple spreadsheet and keeping things kind of non-digital organized. And so all of this, the silver tsunami people, as those assets transfer, the role of someone like yourself is going to go up 10x, like the number of people that need your help, honestly. So congrats on being in a good spot, and you already have massive momentum. But I
I
think that,
appreciate that. We're
yeah,
gonna cross fingers, and again, we create our own luck, but I'm with you on that. Yeah, let's see.
yeah.
Yeah.
I think there's massive demand coming from that because the first gens are like, we don't need that. Why would I need to spend money on that?
Yeah.
We're fine keeping it in
This is
Excel,
literally the
right?
conversations I have on a weekly basis is the Gen
Yeah,
1's like, I don't need that. And Gen 2's like, yeah, we do. We can't see anything. We don't know what
right.
everybody's got. And
We
maybe it gets even more intricate where like they don't want to maybe like you going back to the contentious piece of siblings or something, and they don't want the other seeing what the other doing. So you want to put permissions and separate and show they just see their allocation, right? Like
Right.
that's when all these tools are necessary because doing that by hand is not going to be, well, it's certainly not a productive way to go about
Yeah, one issue is that like many of my centimillionaire clients have over 100 LLCs
it.
and 50 to 100 K1s, and they'll forget about bank accounts that have $1 million
Yeah.
sitting in them, even though they don't like to waste money on a private jet. They'd rather fly commercial first class because it just seems ridiculously wasteful to fly private. But they'll forget about an asset they own that's worth millions of dollars and stuff because they're a human being, right? Like,
Right, it just happens. That's
so
how life goes, and
yeah,
yeah, yeah. No, we see that too. We actually build bots that help reconcile that for them and show them their allocation so they don't forget it. Like that's a case study we've had
right.
actually. Yeah, so
Yeah,
I definitely
that's why that's exactly why it's needed, right? I mean,
yeah,
because of reasons like that, and it all comes back to like the main point of a family office should be to play the custom game and live the life you want to live after creating all the wealth. That's like the number one priority. But right up there, one for me is like, okay, well, as a business person, where do you create the most value? What are you amazing at, enjoy doing, or want to be doing with your life now? If it's playing golf, sitting on a beach, building the next manufacturing company, et cetera, and then organizing the world around you so that you're doing like 80 or 95% only what you really want to be doing, and then have all
right.
these systems around you so you have transparency and accountability and control and you design it the right way. I think, but if you don't start with what you want and your values, then anything someone tells you is the sales pitch, not a prescription based on your ailments and your goals, right? So that's why it all
100%.
first to figuring out exactly what you want.
Goes back to values every time because if you don't, I mean, yeah, then you're just rudderless in the sea of change and the sea of family offices. You're rudderless. You have no idea where you're going.
Right, right. Yeah,
Yeah.
one book I read to my daughters, and they helped me. We created a little video like summarizing the book. Was Arnold, a book called "Be Useful,"
Okay.
and such a powerful book. And in the first chapter of the book, he talks about having a crystal clear vision. And there's a documentary on Netflix called Arnold, which is amazing. And the very first sentence of the whole documentary, he says, "My whole life, I've been able to picture very clearly exactly what I wanted, and then just work very hard on making it true." And what's interesting about that is it's important for people that just had an exit to have a crystal clear vision. It's important if
Yeah.
you're starting a family office and you're engaging your firm to have a crystal clear vision, but also anyone listening to this who's broke in their basement studio apartment like I was when I got started, it massively helps you as well. So it's like all of us need to be making sure that we're really clear on where we're going, why we're going there. And a lot of people are not, even if they're worth hundreds of millions of dollars, they can't really tell me what their focus or game plan is, I find.
Yeah, that's a good point because that's a red flag or at least a yellow flag for them. And you're like, well,
Right.
maybe we back up a step and help you get there. You know,
Right,
and
right. Yeah,
sometimes it's
for
the right
sure.
conversation to start with as opposed to something else.
Yeah, for
So
sure. And we work with a lot of people that are investors, but also people that are trying to reach investors as capital
right.
raisers. And investors are just busier nowadays, right? Everyone gets more emails, and the wealthier the investor, the busier they are. And we just find that most people raising capital don't have their pitch down to one sentence. They don't have a
Yep.
one pager. They have this long pitch deck that people don't have time to read. They don't write concise emails. They don't have a 1 minute video from the founder explaining exactly what they do and why it's compelling.
Yeah.
And if they just had those 4 or 5 things, they'd be light years ahead of 95% of people pitching
Yeah. You would
investors. And
appear
so,
focused and differentiated, right? Yeah.
yeah, yeah,
Totally.
and super concise. And we always like to mention that on podcasts because just hearing that, we had someone named Jack, I think it's Jack Martin, who spoke at our event last week. And he
Okay.
said he had raised $5 million. He read our book on capital raising, changed his strategy, and he raised another $55 million. And just by hearing a couple sentences in a podcast, it could really change somebody's life. And so I always like to try to fit that in there for people listening.
I love that because I think anybody listening to this is going to get several inspirational notes to take back with them and say, "Oh, I need to really think a little more about this." Because
Yeah,
what you're proposing is not hard to go do. You just got to go do it. So
right.
yeah, there's
Yeah,
no
doing is
barrier
the
to
hard
entry to
part,
what you're
right?
talking about. Yeah.
It's
Like
like everyone knows to be healthy, maybe sleep 8 hours and eat foods that have never been through a machine with no chemicals in them and move your body around. But nobody I know
but it's
really
hard to
does
go
all
do
three of
it.
those.
Yeah, we all know it, but do you go do it? That's the harder part, right? The doing is the hard part. Yeah.
Yeah,
So
yeah, yeah.
let's change to future outlook here. And I'd love to hear where's Family Office Club going next? Like what's next up here?
Yeah. So one thing is we're going from 45 interviews on billionaires.com to 100. So we're going to make billionaires.com the number one resource globally on billionaire mental models and strategies. We transcribed all the interviews I did, but we also transcribed 985 public talks by billionaires and put them all in an AI tool. So if you want advice from 800 million people using GPT, you can get that any day of the week. But if you want to have a cup of coffee with the collective wisdom of billionaires anytime, not your day, you can chat with them and it'll quote what billionaire said what to back up the advice. And so that's one of our 3-point moat differentiators is the billionaires.com approach. The other one is our artificial intelligence programs and our tools we put out. So we've got 37 different little artificial intelligence tools like Billionaire Collective Intelligence I talked to.
Yeah, you're really. I was looking at them. I think it's really smart what you're building. I mean, I loved it. I was going through them. I was like, this is fantastic. That I haven't seen anybody else thinking like this.
Right. It's totally different than what you guys do, importantly, right? So it's not an internal search tool. It's not an
Right.
asset aggregator tool. We're not competing
Right.
against them. It's really like 37 little wrappers for GPT, for nerds that even know what a wrapper is, that basically allows you to use AI in a vertical use case study that makes it much, much more useful by using proprietary data, organizing the prompts, organizing a page and a half of instructions of a process flow behind the scenes. And two quick examples would be, we'll take a 22,000 investor database and you can say where you are and what you're looking to get done and say it's a stem cell therapy centers in Miami, Florida. And it will look through and find the 300 people you should talk to out of the 22,000 investor profiles and instantly tell you who they are, where they are, their names, etc. And now you don't have to approach the other people, right? It's like,
right. You can get you. Yeah, you're separating the wheat from the chaff, right? Like you're actually helping people speed this up and make the right connections.
Right. So anytime you go on an airplane trip to an event or you just find the most relevant people. So that's one example of AI use case. And the other one would be we have a tool called Deal Structure Ninja we're super excited about. So you tell it what you're solving for in the deal and all your different priorities of what could blow up the deal. And then it scans 1,000 deal structures and provides you with 10 structures. And you say, I like 2 and 6. And then it gives you more, et cetera. And then it'll write the email to the counterparty and the attorney, pitching them on why it's good for everybody to do that deal structure. And before, what attorney knows 1,000 deal structures and is going to have the patience to pop out 10 options for you over and over and over again at 1 a.m. on a Saturday, right?
They're not going to do that. Yeah. No one. 0 is the head count for that. Yeah.
Yeah, they're never going to do that, right? Even if they knew 100 deal structures, after suggesting 3 to 5, you'll be lucky if you get 1 or 2 more. So those are the case use studies for that stuff. We get super excited about that, and we use these types of tools daily. So yeah, those are fun.
I love that stuff, and I love how innovative it is. It kind of speaks to my DNA and what we're doing here as well. That DNA of you've got to keep listening to the customer. You've got to keep pushing it out to the edge. You got to keep trying new stuff because this is where this is all going. It goes to your point, if it's speeding up faster and faster, you got to be ready for that. You can't just sit back.
Yeah, no, for sure. I think it applies to every industry and every business owner. So just figuring out the exact uses for, there's 100+ uses for anybody, whatever position you're in. So figuring that out is critical.
Yeah. And listen, I know you've got a busy day, so I want to be mindful of your time now. But to wrap it up, let's talk. You've talked about a couple daily habits that you adopt or philosophies. Maybe mention what are the critical ones you see right now to be successful in a driven space as this is, Summarize it for the audience here. What are those top daily habits or philosophies you want to just capsulate for them?
Yeah, two things real quick. One is it's all about mental models. So I'd be happy to provide to your listeners with access to one of our 30 AI tools. It's a mental model tool. We took 100 mental models from everything Warren Buffett said publicly, Munger said publicly, Bezos, Elon, all the 986 billionaires, all the 1,000+ investors that spoke on stage. We have transcribed in a tool. We asked them all for 100 to 200 mental models and put those all into one tool with 2,500 mental models. So you can tell it what you're trying to get done with your business or your family office, and it will suggest to you mental models based on those people. So like that's a tool that we're happy to provide for free. But the number one most important thing costs nothing. You don't need anything from me or you to do it. And that is to have the power, the superpower of extreme focus. I would encourage everybody to start their day with a laminated one pager. So when you brush your teeth or shave every morning routinely, you look at your family values, your monthly, quarterly, annual goals, and then you have like 50 little one-liners. It's almost like talking to your own brain as an LLM saying, I act this way. I do only what's exciting and exponential. I do not go to any meetings I don't want to go to. You know, what I do matters more than how hard I work, but I outwork, outlearn, and have more fun than any other head of an investor club. And then if you have 50 of those things on how your brain needs to operate, and you look at your goals and how you need to operate every day, then you go into your email inbox and you know what mission you're in on, and you focus on the right things. And I think that's to be life-changing for a high school student to know, or a billionaire or a centimillionaire if they aren't already doing it. Like, it's been super helpful.
Yeah, I mean, heck, I might do this. That sounds fantastic because you're right. You're training your brain to be that focused every day, and
Yeah,
and it's an inch every day. It's a battle every day, but then that adds up over time, and all of a sudden you're going to look back and be like, "Wow, look at the progress we've made."
yeah,
I
for
love it.
sure.
I may do this, Richard. I like this laminated idea. I may do this.
Cool. Yeah, I've got a template for it. I'll shoot you over the template.
Oh yeah, please do. It'd be awesome. I'll share it with the team here too. We'll all start doing it. It'd be fun.
Cool.
Cool.
Awesome.
Well, listen, I appreciate you carving out some time for us. Thank you for coming on today. I'm excited to continue to work with you as we go forward. We were talking about some other stuff off camera, and I'm excited for that as well. But thank you for doing this. I think your message is strong and valuable and needed right now, given the wave of change happening in this space right now.
Awesome. Yeah, I really appreciate it. If anyone wants to learn more about Family Office Club or check out our events or communities, it's just familyoffices.com. And we're happy to have you, John, come to any of our events to check it out, since you're nice enough to have us here on the podcast, of course.
Absolutely.
And
I'll be there. Let's do it. Yeah.
Awesome. Thank
Cool.
you.
All right. Thank you, Richard. Appreciate it.
Take care.
All right.